Hello, amazing people. Welcome to my YouTube channel for this week. This week, it's another week. And this week, I'll be analyzing two different pairs, which are Gold Spot USD and Great Britain Pounds USD. These are two solid pairs that I'll be analyzing for you, sharing with you each time frame and their importance, why we use those time frames. And as well, I'll be sharing trading opportunity for you for this new week with you guys as well. So last week was an amazing week, which we actually had a trending week last week. And Go Sports USD actually resumed a bullish trend last week. And for Great Britain Pounds USD, it still continues its bearish trend. And this week, I have solid information to share with you guys on the basic analysis in the forex market as well. And guys, all you need to do is click the bell button, click the subscribe button, so you can get instant notification anytime we drop videos here every weekly. And there is more than enough opportunity in the forex market for this week. Don't forget to check the description box to engage to join our what's it called Telegram channel. In our Telegram channel, there is a lot of trading opportunity we tend to drop there, apart from the analysis we do make on here. So guys, having said that, let's dive right to today's analysis, which is the gold spot USD. For gold spot USD, I'm on the what? The monthly time frame. Let me delete all these basic lines so I can start all over again to share with you how this basic analysis are being done. How this basic analysis are being done. Okay, moment guys. So I'm on the monthly time frame, and as we can see on the monthly time frame, we know the basic thing we use the monthly time frame to do is to know the direction of the market. Currently, this overall trend of this price on gold is bullish, which is upward movement. So scaling down to the what's it called, the weekly time frame. What do we use the weekly time frame to do? We use the weekly time frame to map out our key level. Okay, to map out our key levels and to to see the overall picture of what the price is telling us. So how do we map out our key level? We use series of these highs and lows, which are the resistance support. We use our horizontal tools to connect them together. We use our horizontal tools to what? To connect them together. We use our horizontal tools to connect those levels together. These are highs, lows, highs, which is called the resistance supports. So we use our horizontal tools to connect them. Those levels are basically called the key levels. These levels are key levels which price tends to respect. Okay, this is the basic thing you need to do first. You need to mark out your what the key levels. So I will scale down to the daily time frame. What do we use the daily time frame to do? Is just to adjust the main key level that was drawn on the what on the weekly time frame, because we can see them more on what's it called on the daily time frame, because they are more obvious on the daily time frame. They are more obvious on the daily time frame. So, and there are more levels where can't be viewed on the what on the daily time frame that we will definitely spot on the what on the daily time frame. Some levels that are not visible on weekly time frame, we definitely see all those levels on the what on the daily time frame. So this is what I'm currently doing now. So, and the second thing we want to use the weekly time frame, which is the higher time frame, is look for a pattern that is forming on the what's it called on the daily time frame. You see, for the daily time frame, the weekly time frame, and the monthly time frame, any pattern that forms on those time frame has the high chances of playing out, because it takes them a long period of time to form and there is less noise on the higher time frame. This is the reason why we need the higher time frame more. Okay, we need the higher time frame more for our analysis. So now the basic thing we need to do next year is, as we can see on the higher time frame, we see the market is currently showing us an head and shoulder pattern on the higher time frame. Okay, it's showing us an head and shoulder pattern on the higher time frame, and we have to set off what's it called head and shoulder pattern. we have the basic textbook head and shoulder pattern, which the neckline tends to meet at same level. You see this neckline and they are equal, and we have the sideways head and shoulder pattern. This one is not the perfect textbook one. We have the sideways head and shoulder pattern. Okay, so this is currently what we are experiencing here. When we look at this fourth level right about here on the other time frame, the neckline, this basic neckline could have done something like this and bounce back, but no, price tends to the neckline tends to pull downward more. You see, after this, after the price came to this level, price now pulled back to form the what, the right what is it called, shoulder. Now this is what is it called, the sideways head and shoulder. Okay, this is sideways head and shoulder pattern. Okay, so currently let me scale down to what is it called, the 4 hour time frame, just to show us what is currently playing out on the 4 hour time frame. Let's show us. So as of last week, price bounds off at this level. And before I proceed with my explanation, anytime we see price approaching a key level, we need to take pay close attention to taking trade at a key level, because price might tend to bounce off. Okay, look at this particular level right about. So you see, price tends to what, bounce off here. Price tends to bounce off here and pull back. So, and the same, this basic explanation, let me quickly map out some minor levels right about here. You see, price did something like this. This is an head and shoulder. Okay, this neckline, price did not expect this neckline. What did price did? It creates is a little structure right about here, low right about here. Okay, to give us a right shoulder and pull downward, and price tends to pull back to expect this what is called support level and down. This is typically an example of what is called the sideways head and shoulder pattern. Okay, this is a typical sideways head and shoulder pattern. This is a typical sideways head and shoulder pattern. Okay, this is a typical sideways head and shoulder pattern. This is a typical sideways of head and shoulder pattern. Okay, which I showed in the other time frame. This is a typical sideways head and shoulder pattern. So having said that, on this basic current trend that we are on a bullish trend now, and we need to be careful of what price is doing at this level. We need to be careful of taking trade at this level, because price is currently at what, at a very strong minor level right about here. You see this, when price took it out, price tends to pull back to come respect this level. Okay, price tends to pull back to come respect this level, and currently prices at this. Two things might happen here. Let me mark out a minor level right about here. There is a minor level right about here. Okay, there is a minor level right about here, which is the support levels and resistance level where they meet. Okay, price tends to expect it here. So two things might happen at this level. Let me increase the size of this. So two things might tend to happen here. Price might tend to pull back and expect this before it continues, or price might tend to come deep to this level. Okay, two things. So we need to approach this level carefully and patiently wait for price to give us something tangible to hold on to. Let me scale down to the 1 hour time frame. Let me scale down to the 1 hour time frame. As you can see on the 1 hour time frame, okay, as you can see on the 1 hour time frame, price is currently at this level right about here. Okay, so we need to carefully approach this level. We don't know if price wants to form an equal high, or price just wants to pull back a little bit to form an higher low to continue its bullish trend. So let's patiently wait for price to clear this level and this level. So any of this level price clear, we will definitely take advantage of it. Okay, you see those two levels are these two levels. Let's patiently wait for price. This is a decisive zone. This level is very decisive zone. So let's patiently wait. If price tends to pull back, okay, we definitely wait for price. Patiently wait for price. If it can pull back something like this, if price definitely hold on a moment, if price definitely do something like this, then you can actually take a short sale down here. You can actually take a short sale down here. So we need to carefully approach this level. Okay, okay, we need to carefully approach this level, and price might tend to do something like this and bounce off. Okay, another higher low, then continue its bullish move. So that's the reason why I said we need to carefully approach this level. So let's wait for price to do its thing. That's the reason why I have to show you this level. Okay, this level is a very important level. We need to be patient with that level. So I'll move on to the next pair, which is the Great Britain pounds USD. Great Britain pounds USD. I'm on the monthly time frame. As we know the basic things we use the monthly time frame to do. This monthly time frame shows us the direction of the market, and you can see we are in a bearish trend. Having identified that, we move on to the next time frame, which is the weekly time frame. We use the weekly time frame to map out our key level with the help of the lows and highs, the resistance and support. So the lows and highs are known as the resistance and support. This is the obvious high and obvious lows. As you can see, these are obvious highs and obvious lows. So these are resistance support, resistance support, series of resistance and support. Okay, series of resistance and support. A moment. Okay, here is another level. There is another level right about here too. Okay, there is another level right about here. Okay, we are connecting all those levels together. Here the support and the resistance meets. So we are connecting those dots. We are currently connecting those dots. We are currently connecting those dots. So this is the low. This is the overall low. So there is another minor level. There's another key level right about here. Rather, there's another key level right about here. Okay, this level is another key level. There's another key level right about here. So this key level. So having drawn that, we scale down to the daily time frame. And before I proceed to the daily time frame, let me quickly explain something. You see, the basic market structure, what it does for us is it helps us identify when there is a change in trend. Okay, all the structure are not just there, they are meant to help and guide us in our analysis. You see these higher lows, higher lows, higher lows, higher lows are there for a reason. And the advantage of these higher lows is this: the higher lows are meant to tell us when there is a change in trend. Looking at this is a bullish trend, and the market structure for bullish trend is series of higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. How do we know if we are still in an uptrend when price is still forming an high and higher low? It's when price is unable to break this current new higher new what's it called higher low. If price is unable to take out the current higher low, this higher low, and price tends to bounce off that level of higher low and continue, that signals to us that we are still in a bearish trend. But once price has taken out this higher low, as price did here, price has taken out the higher low. It took out the first one, price took out the second one, took out the third one. This signals to us that we are in a bearish trend. And when looking at it, look at the moving average. The moving average has crossed to pierce through the what's it called the price action. This is a bearish engulfing candlestick. Okay, price has paid. It shows that we are currently now in a strong bearish trend. So having explained that, let me proceed to the daily time frame. Okay, a moment. Currently we are on what is it called a daily on the daily time frame, and we are currently at this level right about here. A moment. We are currently at this level right about here. Okay, this minor level right about here. This is a minor level. This is a minor level right about here. Yeah, this is a minor level right about here. This is a minor level, and price is currently expecting this level right about here. See these levels right about here. Price is currently at this level, and this is a key level right about here. So we need to take note of all these basic levels. These levels, price tends to expect it. Price has reacted to it at the previous price action, and price has the high chances of expecting it because this is an higher time frame level. Okay, so basically what pattern do we see on this higher time frame? This is a sideways head and shoulder pattern. This is a sideways head and shoulder pattern. Okay, this is a sideways head and shoulder pattern. So how do we do it? Let's connect the neckline. This is the neckline. Okay, this is the neckline. This is the neckline. Okay, that is the neckline for the sideways head and shoulder pattern. Okay, before I proceed, I need to explain one thing to you. You see this level at which price might tend to bounce up this level and might tend to take out this minor level. This minor level might not be able to hold, might not be strong enough to hold price to pull back to retest this level. Okay, this trend line, or price of this level might tend to what hold it to bounce off and continue is what a bearish trend. So we don't know what price wants to do. So at this level, we need to patiently wait. Okay, let me scale down to the 4-hour time frame. Let me scale down to the 4-hour time frame. Okay, you see this level that we are at right now. You see every indication on this particular chart is pointing downwards. So price might tend to take this level out. Okay, we test it and continue what the downward trend. Okay, price might tend to do that for us, and price might tend to do this as well because we are at a particular level where we need to be careful. Price might tend to bounce off to go retest this level before it comes back. So let's patiently wait for price. Once we see this type of candlestick, this bearish candlestick, pierce through this, then we can definitely look for a short sell opportunity. I'm on the 4 hours time frame. Let me scale down to the what's it called the 1 hour time frame. You see how I systematically break down from the monthly time frame to the 1 hour time frame. It's just a gradual step. That is how you do what you systematically break down the chart one after the other before you take what to look to spot an entry. Okay, all we are doing now is spotting an entry. So let's patiently wait for this level to be taken out. This particular level right about it. Let's patiently wait for price to take it out. This level. Okay. So whatever price wants to do at this level, we definitely react to it. Okay, we definitely, if price tends to break out, we definitely look for a short position down to this level. Okay, we definitely look for a short position down to that level. But if price tends to use this zone as a zone to hold, so it can pull back to retest this level, we are definitely ready for it. So just let's be open and be careful of taking trade at this level, and let's put at the back of our mind that we should not trade what we think is going to happen. Let's patiently wait and trade what we see on the charts. Okay, so having explained this, I want to say a big thank you to you guys. I don't really have much time anymore to explain one more, to analyze one more for you guys. So I will say I will call it a day here. Okay, so next week I will come back here to analyze the chart for you and systematically show you how you can analyze your chart from the higher time frame to the lower time frame by spotting, trading, entry, week in and week out. So thank you guys. Don't forget to like, subscribe, and click the notification bell button so you can get instant notification anytime we drop trading analysis here every week. So bye for now, guys. I will see you next week, guys.